Hello there, boys and girls, and welcome back to another episode of TA with MK. My name is MK, and in today's video here on Sunday, it's the afternoon anyway here in the United States where I'm from on Sunday. Just wanted to give you guys a quick update on the Bitcoin price and the ICHIMOKU cloud short signal that actually fired off upon the closure for yesterday's price. Now, I made a shorts video this morning, just kind of, I guess just mentioning that had happened. And then this is now the follow-up video where I'm going to kind of dive a little deeper, explain what it was that made that signal, I guess, come to fruition, what was the criteria that was met as of, yesterday's closing price. And is there any confluence for, what price action could do next over the next week or two? So we're going to discuss that in today's video. And as always, if you guys are liking the content, please remember to like and subscribe, and let's go. It's TA with MK. It's TA with MK. All right, so to start out, just in case you haven't been keeping up, I guess, maybe with the videos over the past, few days or, weeks, or living on a rock, or whatever the case may be. We're going to start out here with the Bitcoin Daily and just kind of give you a quick overview of what's been going on as far as, price action over the past, really 2 months, almost. This is mid-June. We had the breakdown when we were, previously up above 30K, broke down, and then, we spent from basically, mid-June, June 18th-ish, until about a week ago on August 19th inside of this large bear flag, which, we spoke about in previous videos, did break to the downside, which statistically speaking, that was exactly what it was supposed to do. It's a rising channel, even if you don't really, pay attention to the flag part of it. And in fact, when I show you my measured move, I'm not actually doing the measured move for the actual bear flag. I know that that's something that maybe some other YouTubers may talk about or may put in your mind, and it's not that it's invalid at all. It's just that, to me, it's not something that even if it happens, is going to happen anytime soon. So we try to kind of focus more on what's realistic, at least on my channel, in front of us. Now, the measured move for that actual bear flag, which if you flip this upside down, it just looks like a flag, right? That was the pole that I'm using as the measured move. And then, this was the actual flag, or it was the rising channel. That measured moves clear back down under 10K, sitting at somewhere about $9,000. So yes, could Bitcoin go to that? Of course, but not something that I'm expecting in the near term future, if it does even happen. So what I actually use as my measured move was just the width of the actual channel, right? And I did an aggressive measured move, and I did what I call the conservative measured move, just based on different ways you could draw the trend lines. And I came up with a target zone of around 18,600-ish on up to about 19,500-ish. Also, when we broke down, you kind of had this smaller bear flag that we've been in, or were in, from August 19th until it just recently broke down on the 26th, just a couple days ago. And there's some confluence there as well with that same kind of area. If you take just this last kind of the pull for that flag, and drag it over here to where it broke down, that puts you right back in this same green zone. Or if you wanted to consider this entire thing the flag, there's a lot of ways you can do this, which is why I don't focus so much on the measured moves of these things, more just looking for some confluence, so to speak, with areas of, lower support should we continue to trend lower after we break down out of these patterns, right? But, that more, I guess, would be the more aggressive measured move for this smaller bear flag that just broke down. And that actually puts us clear back down to new lows, or at least back down to, right around where our previous low was on spot price action anyway, at about 17,500. So at any rate, what we're going to do now, though, is what I wanted to be the focus of today's video, now that you've kind of been caught up to speed if you weren't, was going to be the ICHIMOKU cloud indicator, which I will leave a link in the description for, a video that I just put out a few days ago that's kind of a beginner's tutorial video on how to use this indicator. But it just as of yesterday's daily price action closure, fired off what we would call a short signal. So we're going to go over that now. All right, to do that, we're just going to quickly turn off my drawings just to make the chart a little cleaner. I'm going to go up here to this drop down box, and we're going to unhide the ICHIMOKU indicator. Now, again, that link will be in the description. I would recommend watching that if this is all brand new to you as far as this goes. I'm not going to dive deep into this in this video. Just wanted to point out that it did give a short signal and kind of what that entails. Now, the indicator is completely free, and you can actually just go up here to the top left where it says indicators and search for it. It's the ICHIMOKU cloud. Just this one right here that comes up. Click on it, it adds it to the chart. I changed a few of the colors on a few things, so it's a little bit different on mine now than it might look if you just barely add it to yours. The default colors for some of these lines on here are different than what I have here in this video. But anyway, so what you're looking for on this daily, for example, is you have this lagging span. Now there's three things that have to come together all at the same time, and I'm just going to go over this pretty quickly. But you have the lagging span, which is 26 bars or candles in this case, behind price action, current price action that is. It needs to close below the cloud, so it did close below the cloud. You've got the blue conversion line on my chart needs to be crossed below the white on my chart anyway, baseline. So the conversion line needs to be below the baseline and needs to close below the cloud. So this did as well. This is the conversion line and it is below the cloud. And then the cloud that's out in front, you need to see the green, there needs to be a green crossing below the red. So the opposite of these three things would be true if you were looking for a buy signal. It would be this lagging span closing above the cloud. It would be the conversion line closing above the cloud and being above the baseline, and then this would need the green actually crossed above the red. So the indicator works both ways. It gives you, buy and sell signals, and what it is, it's just a strength of trend indicator. It's not telling you where the bottom is or where the top is. It's quite the opposite, really. It's just showing that the trend that's currently happening is strengthening, if anything. So in this case, price action is going down. We know that it has been going down for a few days. And it's also showing that, hey, the strength of this trend looks to be intact. And if anything, it's strengthening. So it's just more of a continuation idea. So, keep that in mind, of course, and take it with a grain of salt. But one thing I wanted to let you know is this indicator has about a 70% hit rate. And especially if you use it the right way, you'll easily see why it could be that strong. You want to use it like everything else in confluence with other ideas. But what I wanted to point out was back on April 26th, let's see if we can find that. That was the last time on the daily that this put out a signal like that. Let's go ahead and put Alt-V on my chart here. Oh, I turned my drawings off, duh. Okay, so just temporarily, it's going to be a little messy. I do apologize. Let me delete two of those on accident. Okay, so the last time this gave a sell signal was right here. And the way that I figured that out is I used this replay feature that they have on TradingView. I click that. It lets you pick a bar that you want to go back to and kind of just it gives you the ability or the superpower, I guess, to temporarily go back in time. So if I click right here, I believe it was this bar. No, it was the very next one, very next candle. So we're going to hit play real quick. Let that next candle close. I'm going to go ahead and click that as the bar to jump to. Maybe it was the one after. Okay, yeah, one more after that. So this one. So we're going to go ahead and click on this bar here, which was actually the 27th. So I misspoke. But on the 26th, when the candle closed, so still kind of was, what I meant to say is that when the candle closed on the day of the 26th, you can see that at that time, the lagging span, which is this green one on my chart, had closed below the cloud. So this is obviously the portion of the cloud up here. It had closed below it. That was one of three. Two of three is you had this blue conversion line was below the white baseline on my chart, and this closed below the cloud. And the third one was that green is currently below red and the end portion of the cloud. Now, the end portion of the cloud had already been turning red there, but really when we zoom back forward to current price action, you'll see that our current cloud still kind of shows to be green. That's really not important. What really is important is just which one's above the other. And in the case of a short signal, you want the green to be below the red. So it needed all three of these things, 1, 2, and 3 to all be true at the same time. It fired off a short signal, and then if we just hit play, kind of let it go for a second, you'll see that price action, it took it about 8 days, right, to about here. Let's see. So it took it from the time it fired the signal, 1, 2, 3, 4, 5, 6, 7, 8. It really was the 9th day before it actually began to capitulate. So it's not a signal that, especially on a higher time frame like this, like the daily, it's not going to sometimes play out right away. In fact, sometimes it can take a few days, and sometimes it can even take a week or a week and a half, even on up to like 2 weeks, and you just have to kind of be patient. Now, something like a 4-hour time frame might play out over the course of a couple of days, but something like a daily, which is a much stronger signal, it might require a bit more patience. And you'll see that before it started to dump, from the time it fired off the signal, price action was actually sitting at like just over 38K, right at the bottom of this red candle. It actually pumped at one point up right around 6%, right? So it actually went up about 6% more before actually, quote unquote dumping. And then you can kind of see price action begin to dump. Now keep in mind that the way this gives you your exit signal it's not actually the way that I would have exited this. To me, this is a very good indicator for kind of giving you your entry ideas, or at least continuation ideas. But I use Confluence with other reasons to take profits, bump my stop loss up. Had I been in this trade, and I wasn't, just being transparent, I wasn't using this ICHIMOKU Cloud indicator at the time. I've only been using it for a little over a month now, so I wasn't using this at the time. But had I been using it, I would have been taking profits right when it hit here at this major level of support. You always want to chart out your support and your resistance levels. In the case of shorting a coin, you're going to want to take profits as it approaches levels of support, right? Because that's going to be areas where you would expect a bounce, just like it did here, bounce. But as far as the indicator itself telling you it's time to exit, you're waiting for two things. You're waiting for this lagging span to touch or be above price. Touching is good enough. And you're looking for this blue conversion line to cross back up above the white baseline. So we're going to continue to play this out so you can kind of see when this indicator would have told you to exit had you solely traded based off just it. And so we're still playing. You can see that lagging span is coming. Lagging span touch price right there. And at that point, you can see that the white is starting to cross down, but they haven't crossed yet. So you wouldn't have quite had the signal. You need both to be true at the same time. So you play another day, boom, right there. We can zoom in a little bit on the chart, but you'll be able to see at the end of this closure here, the blue is actually now crossed back above the white. So now the conversion line's back above the baseline. And of course, this lagging span is, stuck in the middle of price, so it's touching price. So that was 29,865. So had you entered up here, just based on the signal, that was at just over 38K. Down to the current price here, that would have been about a almost 2% move. Now, had you been using some, low leverage or something like 2 or 3x leverage, that could have been a 60, maybe even a 90% or 80%. If you're using 4 or 5x, so you could imagine even just taking the 20% though. That's a pretty good move, and you can see the power that these daily signals on this indicator have. So again, we're going to fast forward to current price action. So we're cleaned back up, just the indicator back on, no more drawings, and this is the current price action. Again, we just had this fire off yesterday, and we want to kind of just get some ideas of, hey, what if it has similar behavior this time around? Now the signal has already generated, but just like the previous one, as we just spoke about, if you remember, I showed that when the signal fired off, by the time it actually capitulated or dumped, it was like 8 or 9 days later. So it was almost a little over a week later before the signal really actually began to play out, and it even went up at one point around 6%. So if something like that, say, were to happen this time around, doesn't mean it has to happen. History doesn't need to repeat itself, but I have back tested a few of these beyond what I'm speaking about in this video, and it's not uncommon actually for that to happen. A lot of times it's just sideways price action, but I've seen some as much as 15% pumps before dumps. But at any rate, it seems like an average, good average for the past several times it's given in, if it's going to go to the upside at all, is pretty similar to what the last one did. So something like that were to happen again, this is going to temporarily put my drawings back on. But if we were to see a pump of say 5-6%, well, where would that put Bitcoin? Well, it could be, in this case, just a bearish retest of the underside of this smaller bear flag that we just broke down out of. And you could see, something around the range of like, say, 21,003 or 21,400. Well, is there any confluence with that as far as it relates to support or resistance? A little bit. You can kind of see back here that kind of zone was definitely support in this area. 21,000, a little bit higher than that at around 21,600 was clearly resistance, once and twice back here. So something like a 6 or 6.5% move to the upside wouldn't invalidate the signal either. To have the signal invalidate, you actually would need all the things that did cross to uncross, essentially. Once they've crossed, really the only thing that can invalidate it at that point is when this touches price, which clearly is going to take at least X amount of days, because it's behind by 26 days to current price. You can see that even from here, this little dump area right here, that how many days it would take just to get to that would be, you know, quite a few. It'd be 26 minus maybe 1, 2, 3, 4, 5, 6, 7, 8, 9, about 10. So you'd be still looking at like 15 days before you would really have even an opportunity for this to catch up and maybe potentially touch price somewhere in here, you know. And so these signals, they're powerful, but they do take time to play out. So would I be afraid, let's just say, or I don't think that's the right word to use, but would I think that the signal was wrong just because price went up 5 or 6%? Well, no, I would not, because that's something that's happened in the past. If anything, I would just be eyeing that as, okay, this was expected. It makes sense. It might even potentially turn some people short-term bullish, thinking that, hey, we're bouncing, we're recovering, we're back over 21K, and I would just be looking for, you know, DCAing in, or, you know, opening up larger short positions at that point. So if something similar were to happen, you might look at, I believe it's the 28th today, we might be looking at, say, you know, if we just go with what it did last time, around 8 or 9 days, you know, you're looking at about the, you know, end of the first week of September, sometime around like maybe the 6th or so of September, you know, which would put us into, you know, let's see, right around here, if we were to alt V there, something like that, you know, maybe price action, if it were to go to the upside, maybe it consolidates for another day or two, maybe it has one more try up here before ultimately rolling over to, you know, at least the measured move for our breakdown that we recently had. And in my opinion, with something as powerful as this signal, let's just say it did something similar to last time from that point where it goes up to, well, from the time that the signal generated, which would be yesterday, so price action right around 20K, what would a 20% drop be? Well, that would put Bitcoin down around 15,000, 16,000. Well, is there any other confluence with that area that could, you know, make something like that make sense? Well, let's look at it. And to go ahead and do that, I've just hopped over to the BTC to USD Bitstamp chart on TradingView, just because it has the most history. So it's always the one I revert back to when I'm trying to show things to do with, you know, previous bull market. That was the FTX exchange chart that I was using on the previous example, and it just doesn't have history dating back to the last bull run. I'm guessing FTX just didn't have, either it didn't exist, I don't know a ton about FTX, but either it didn't exist or it didn't have Bitcoin, which, I mean, if you're an exchange, the very first coin you would add would be Bitcoin. So my guess is FTX, if I were to do some quick Googling, probably it wasn't out, you know, at the top of the bull run in 2017. But I could be wrong. Either way, the chart definitely has no history dating back to there. So that's the main point, right? Again, just to show you what I'm talking about, since I just rambled on about it for a minute. If we look over here on the daily chart for FTX, you can see that it only goes back to March of 2020. So I don't know if that's when this exchange launched, potentially, right? But anyway, it's not really the point, but I just had to mention that real quick. So I switched over to this chart just because it has the most history, at least that I found on TradingView. Now, is there any confluence with if the price action breaks down below 17,000 over the next, you know, week or two? Yeah, I mean, you have this kind of zone between the summer rally or the bear market rally of 2019 where Bitcoin almost reached 14K, and then you kind of have this little area back here where price action bounced, and that's at around just over 16K. So you kind of have a zone there where I would imagine at least there'd be a lot of buyers waiting. I know I personally, as part of my long-term strategy for Bitcoin, have, you know, buy orders waiting to just over 14K. That's an area that I've been eyeing. We made a video a few months ago talking about 12K as being a very confluent area for, you know, to be the bottom if Bitcoin continued to break down, and it could go lower, whatever. It would just be an area that would at least interest me long term. And I was, you know, my plan, which I'll leave a link in the description for that video actually, in case that's something that interests you, is seeing the plan that I put together months ago, but would be to front run that at just over 14K. Now, I don't think that if we do break down from this point that we will go that low this first go. I actually think there was a lot of reason to think that something at like 16,000, which is where I said this bounce happened, would be an area just over, maybe even 16,200 or 300, might be where we see a short-term bounce, maybe even a little bit more of a rally, right, to the upside before ultimately, you know, potentially anyway, rolling over again, or at least consolidating for a while before, you know, the bear market puts in its official low. I know a lot of people believe the low is in. I personally don't, but a lot of my opinion on that can be changed or strengthened based on what happens over the next few weeks, because you know, from a time standpoint, and this is something that I'm going to speak about in tomorrow's video, from a time standpoint, we are reaching, historically at least for Bitcoin, the time of the cycle that could be the low. Usually between September, which we're just about to enter, and the end of the year, following the blow off top, so about a year later typically is when the lows are usually in. That doesn't mean that Bitcoin historically at least has turned right around and went to the upside. In fact, quite the opposite. It's often spent around a year after that consolidating, maybe making some little rallies. Of course, this one had a huge rally in the middle of the summer, but at any rate, you kind of had that year after the blow off top, one final capitulation. In this case, it happened actually end of November of 2018. You capitulated a little bit more after this support had been holding, and then you consolidated sideways for a while, and then you went on another little run. Now, the previous bull market before that didn't do that. It actually just went sideways more or less the whole time and then went on its run. But at any rate, you could see just from a time frame, we're getting close to what historically is the bottom. But then at that point, even if it didn't follow this cycle, or did, that had about another 200 days before it found another little local high. But as far as it actually breaking out and going full bull run mode, was another 2 years almost, really. Although it started to go up before that. But the point is this is full on bull run, right? This right here is where the easy money's made. So trying to forecast that would be, basically if it followed something similar, you're looking into like 2024. But we want to make money between now and then, so point of this video is that the ICHIMOKU cloud has fired off a short signal. We're going to watch the lower time frames now to hopefully take advantage of and short some coins to make some money on what could be, maybe a new low for Bitcoin in the coming days and weeks. So we'll keep you guys posted on that. Again, as always, I have a link in my description for my Telegram group. You're welcome to join that and get some more up-to-date or up-to-speed ideas on coins I'm trading, when I'm entering, where I'm stop losses, and all that kind of stuff. And hopefully, we can all make some money together regardless of what direction Bitcoin decides to go. And that should about wrap it up for today. As always, if you guys are enjoying the content, please do me a huge favor and remember to like and subscribe, and we'll catch you tomorrow. It's TIMECODES.